Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 21st of May. Starting off with an unusual choice, Anglo Asian Mining, but normally smaller ticket stocks. But today we've got a small selection of stocks, so Anglo's made the grade. Here you can see a clear break of that line of resistance from January. That's around the, £1.45 level. While we're above that, looking towards the top of a rising trend channel from back in October as high as 200 pence, and that could be seen as soon as the end of next month. If we're lucky. If we're not so lucky, then we break back below 145 or even the 50-day moving average at 140, but it looks as though on a rather dull day for many stocks in the small cap space, this situation looks quite strong at the moment. Hopefully we'll get a repeat of what we saw in January for this particular situation. As I said, rather thin on the ground as far as bullish situations are concerned, so we're repeating some of the ones from earlier in the week. First one is Asimilar, which seems to be holding steady above the 50-day moving average at 37.5. In fact, holding steady above recent 39 to 40 pence support. And while we're above the 50-day line, looking towards the top of that broadening triangle from January, as high as 52 pence over the next 2 to 4 weeks. A stock which gets the odd mention now and again here is AFC Energy, and tends to move quite well when it does move. Here it looks as though we bounced off the floor of this triangle that's been in place since November. That's around the, I suppose currently around the 54 pence level. While we're holding above that, looking for at least a retest of last month's resistance through 70, but a break of that line from December at 69 pence could be the trigger for further greater moves up to as high as £1.40 over the next 2 to 3 months. And the plus point, I suppose, at the moment is the way that the 50-day moving average is currently rising around the 59 pence level, and the 200-day line's been rising for quite some time. It's always a positive when you see a stock or market finding multiple support points above a rising 200-day line, as we have had here with AFC. It does suggest that the consolidation that's been in place will give way to the upside, and of course that £1.40 maybe by some time in July. One of the more unlikely bullish candidates, at least according to some, has been Iconic Labs, but shares seem to be getting rather much more active in terms of their price action. A very strong green candle yesterday, one earlier in the month as well, but everything here hinging on a decent weekly close or end of day close above 0.02 and that September resistance line projection. If we can get sustained price action through 0.02, then 0.035 could be on its way by the end of next month. Let's see if that can be done. Obviously, we had that blip back in September, and hopefully on this occasion, the bulls will be able to stay in control for more than the 2 or 3 days, which seems to be the case whenever there's a spike. We had that earlier this month, we had that in April, and of course we had that back in the autumn. On to a less hairy situation, perhaps one of the better stocks that I'm going to be looking at today. Here we've got Lexington Gold, clearly helped at the moment by the resurgence in the gold price. The key takeaway as far as this week's price action is the way that new support, i.e. yesterday's low at 4.5 pence, was well above former, 1 year resistance between sort of 4 and 4.25 pence, and that's a big plus for the shares. The gap higher today, which is as yet unfilled, is another positive for the stock, which suggests that 6 pence and a retest of this month's resistance is in the bag, and that we'll get hopefully a weekly close next week above 6 pence to give us a target as high as 10 pence, hopefully by the end of next month. Stock which seems to be one of the more followed of the day, or the most followed of the day at Vox at the moment, is Mobile Streams. And here we've got a situation where the shares are still trying to get through that high 20s in terms of the resistance that's been in place. I think 0.27, 0.28 the last peak, in fact 0.29 the last peak last month. Clearly, if we get a weekly close above 0.29, we're on off to the races in terms of the bull argument. But you could say that the shares have already done the dirty work in breaking above the 50-day line and holding above that, and also breaking above that April resistance line around 0.26. So 0.26 plus for Mobile Streams. If you're a fan, you'd be willing it higher, but a close above 0.29, 0.3 could then at least give us a partial retest of the March resistance through 0.45 sometime in June. The real estate sector clearly hot at the moment with the stamp duty efforts, etc., etc. Here we've got on the market, which has been on the back foot ever since December, so sort of nearly 6 months of consolidation for the shares. But it looks as though 80 pence will be the low area for the shares. We've had multiple tests of that particular zone, a little bear trap below it or towards it earlier this week. So assuming that we'll be able to break the 50-day moving average and that line of resistance from December either today or early next week, and through 94, the target here over the next 1 to 2 months as high as £1.35 at that January resistance line projection, effectively the top of the post-January triangle for on the market. Just a few stocks to go now. First is one that I tend to hesitate with because it tends to be one that just gets stuck in a range and stuck in a consolidation. What will be interesting here for Rockhopper is if we can get an end of day or a weekly close above the 50-day moving average and that line of resistance from March at 9.9 pence. If we could do that over the next week or two, then the chances are that over the next month or two we'll get a journey towards that 14 pence January resistance line projection. So the earliest is probably by the end of next month, otherwise going into July on that. And the upside value while we hold above the recent bear trap down towards 8.1 pence. So above 8.1, the chance of 14 pence via 9.9 pence. A stock which has started to get much more following of late, Riverfort, with its decent investments that it's made. Here we've got the current situation where it's finding support at the 50-day moving average so far this week at 1.93 pence. The longer we stay above that 50-day line, the greater the chance of a move and a retest of the best levels of the year to date, 2.5 pence plus. If you're looking for a momentum trigger, then that would be an end-of-day close or a weekly close above the 2.2 pence level, which is the April resistance line. But at the moment, it looks like the 1.9 pence area is coming in as a higher low and decent support for Riverfort shares. Onto Shoezone next, and here presumably this is a bit of a post-pandemic play. Nice little spike here with the shares through that March resistance line at 80 pence, and the longer the shares remain above 80 pence, the greater the chance of a move towards the top of the rising trend channel from November as high as 105, and that could be seen as soon as the end of next month. At this stage, only back below the floor of the channel and the 50-day moving average at 71 pence, really delaying the upside scenario. Finishing off again with Shield Therapeutics. Nice to see that it's just nudged through the recent resistance. That was at 57 pence, the initial May resistance. The longer the shares remain above that, the greater the chance of a move towards £1, which obviously seems rather ambitious at the moment. But we could see that over the next 4 to 6 weeks, maybe going into July for that particular target. But would be surprising if we didn't manage to get to 80 pence as soon as the end of next month. That's it for me today. More updates next week.